Okay, we got another two properties that we're gonna battle today, all right? Right, so first things first, the two properties. It's 17 Lawrence Avenue, and this is in Guelph. This is a duplex, a legal duplex, all right? And also we're gonna assess 63 George Street in Kitchener, also a duplex. This actually could be a triplex. So let me go into the specifics. So what we're gonna do is first things first, we're gonna copy the address so we know what we're talking about. We're gonna go over here and we're gonna just paste it in. Okay, that's Lawrence Avenue and then George Street. We're gonna put George Street right here, okay? There you go. So also I like to do is take the picture. I like to take a picture of it just so I know what property we're looking at, just so I remember, because there's so many properties that we analyze. So I just take a picture of that one. Okay, let me take a picture of this one. All right, go back to the spreadsheet. All right, let's add it. So we're gonna go here, insert the picture. So this is 17 Lawrence Avenue. We're gonna come over here and do the same thing with this one. Again, you guys don't have to do this, you know, that's if you're just comparing from one property to the other. That way we don't forget what they look like. All right, let's get this quickly done. It's another property we looked at. We'll add that, and then let's jump into this, okay? All right, cool. So from here, 12 Lawrence Avenue, 755. Let's look at specifics over here. Scroll down a little bit. It's a legal duplex in the ward. Live in one unit, rent out the other. So basically there are two great sized bedrooms on the upper unit. And then the main unit offers two bedrooms as well. Okay, so 2 and 2. All right, so let's do this. So we're gonna go back here. 755, let's add it. 755. Right, let's put 20 down. Let me blow this up a little bit. There we go, that's better, right? 20% down. And we're gonna go with interest rate of 5%. Okay. Could get less, could get more, we'll see what happens, okay? So the market cap in Kitchener, so looking at around 5. Number of units, this is a 2, right? It's a legal duplex, add in 2. We go to the income, so a 2-bedroom in Lawrence Avenue in Guelph. Okay, so let's go here. We're gonna go to just Google. We're gonna go back here. What's the average rent in Guelph? Then we're gonna go to Zoomer. We're gonna scroll down, and then we're gonna select 2-bedroom. 2349. So 2 bedrooms, right? So we're gonna put 2 here, and then 2349. Hit enter, automatically calculate. Look at that, we're already at cash flow, $14,000 cash flow because we haven't added any expenses. Okay, so let's go back to the listings. Usually, sometimes they tell you the in terms of sometimes they'll tell you the taxes and so forth. Sometimes they don't. Let's just have a quick look to see if they have that indicated here. No, does not look like it. Oh, hold on a sec here. Built in duplex, 2.5 stories, multifamily. Okay, no, it doesn't. So it also says here that it's separately metered. I noticed that separately metered in for hydro, which means, and 2 parking spaces, which means that the landlord tenants are paying utilities. Okay, so taxes on this type of property, $755. We scroll all the way to the bottom. It actually calculates it for you. So it's around $7,550 a month. Okay, the taxes. So per unit is $3,775, but the total for the year is $7,000, roughly on a 1% rule of thumb. So let's just do the math here quickly. So $7,550 a month divided by 12, so $629 a month. Okay, so we're gonna go $629 a month. So we're gonna go up to the top, $629 in taxes, 29. Okay, there you go. And insurance. So insurance, you're looking at least $400 a month. Let's say. Yeah, let's be conservative. They're paying utilities and taxes, utilities, right? Because it says that it's separate metered. From what I remember, yeah, separately metered. Okay, which means that they're going to be paying for that. which is great. Okay, obviously there's maybe repairs, maybe a couple things we don't know at this stage. Okay, let's just move on. So in maintenance, 5% is automatically put into that. Okay, so a vacancy, it's a duplex. We're going to put in 50% again, because if one person is not there, that means 50% of your income is gone, right? And a management fee, it's two units. If you don't live in in Guelph, and then you're going to probably have someone, if you don't live close, you may have someone to pay for maintenance. In this case, let's say you live not too far from it, and you're going to self-manage it. Okay, so let's leave it at that. So we're in a negative. Okay, so the net operating income is in a positive, but because of the debt service, we're in a negative. Okay, so let's move down. So we're gonna go to Cash Flow Maximizer. We're gonna go through each one step by step to see if we can increase the cash flow in this property. We're gonna increase the profits by the rents by 2.5% by law in Canada as of 2023. Laundry, you can't charge any extra for laundry. Okay, parking, that's parking. Maybe one unit has a dog. Okay, $100 a month extra for that, and $100 deposit fee. All right, tenants pay utilities? Yes. So we don't have utilities. Energy efficiency. Okay, let's say we're going to put 5% in there. We're going to improve the lighting in the house and in the common areas and outside. Okay, so lower interest rates. So we're going to check that, make sure that we've done it. 5%. I don't know. I don't think we can get anything lower than that. Okay, not right now in this current market right now, as if we're in November 24th, right? Okay, so increase down payment. Yes, we could do that. So we're going to increase the down payment. We got 20% right now. Let's increase it to 30%. We're going to cash flow. We are not. Okay, let's increase it to 40%. We're not. We're in a negative cash flow. Okay, so but as you scroll down, you're going to see how we're able to turn this into a positive cash flow. All right, so we got a down payment at 302. So we're going to bring it back to 20. Okay, 20%. Bring it back to 20%. We're in a negative cash flow. Okay, let's move down the scale here. Self-maintenance. Okay, yeah, we're going to self-maintain this property. So yes, we're going to remove 5% from our liability. And this is what I recommend everybody do, is the rent guarantee program. Okay, so we're going to say yes. Again, I mentioned this a couple of times. Basically what it does is it pays for your rent if in case there's a person that's in your unit and they're lost their job, they can't pay the rent. This company is actually going to come in and pay their rent for up to 12 months. Okay, and they will help you find another tenant. They'll vet the tenant, they'll screen them, and do all that stuff. And in addition, they also hire a lawyer if they have to evict the tenant. In the meantime, they still pay your rent. Okay, but you gotta have to pay 5.5% of whatever income that you're bringing in per unit. Okay, so but now we don't need the vacancy, so we're going to remove the vacancy, and because it's no longer 50%, right? It's going to be 0, because now we know that we're going to have guaranteed rent. There you go. We're in a positive cash flow. This is the guaranteed, guys. This is something that you guys have to do. Okay, reduce offer price. Okay, we're in a positive. Look, if you look down here, we got 4 green lights, which means it's a good deal. But are you happy with $460 a month? Monthly profit at $5,619 a year. Maybe that's good enough for you, and it's a great deal, and then you go with that. But why don't we see if we can negotiate this price? Let's see if we can bring it down to, let's say, $700,000. There we go, $700,000. There we go. So we brought it up a little bit. Okay, so that's kind of essentially how it works. Now, according to the income and so forth, the property is actually valued at 886 based off of the income. Okay, so yeah, so we're actually getting a really good deal on this, right? It's a good deal. So this is something to consider. So what we're going to do is this. Again, here, if you have any value adds, you're gonna reach out to, if it's something that you like, and you think we've analyzed it. Now you're gonna reach out to Jackie, let's say, and over here, and you're gonna ask her for the rent rolls, P&L on this, and see exactly in terms of the rent. You want to double check on everything, right? And that's the next step. And if there is, you're going to need value adds. You're going to write down what things you need to do. Maybe you need to, create your LOI, which is your letter of intent, find out what needs to be repaired, and you're going to enter all the information here. Okay. So now we got a vendor take back. So now this is very common with commercial properties. Usually 10 plus units are more ideal for this, but you can do this either way. Okay. So right now we're going to put in the properties at 755, is it? Just double check. Yeah, 755. Okay, so let's say we're gonna give them those 755. We're gonna say, okay, we want to buy this property. We're gonna give you 755. We're gonna go down here to vendor take back. We're gonna go 755. We're gonna enter that. We're gonna add how much you're gonna see if they can hold back for you. I would say try and go for 150,000. Okay. And then you got to rate a percentage of 3%. Okay, see if you can get lower. So now essentially you're going to the bank to purchase the same property for $605 based on 20% down. Let's say let's just put 20% down and 30-year term. Oops, 30-year term, and we're gonna go 5% rate. Okay, boom. Okay, so this is a solution, guys, if you don't have enough of a down payment. Okay, so now you don't need, so in this case, the down payment on this initial property is going to be down payment part required. Okay, so we have a little bit of a lesser down payment, right? So it's 121,000. The other one's 140. Okay, so allows you to afford the more affordability. You also going in trying getting a mortgage with a bank is 605. So it's going to be a little bit easier in terms of ratios for you to qualify. This is the whole point of seller financing, okay, guys, is to make it easier for you guys to qualify. So we scroll down, we scroll back up, and you can see they're both green lit. Okay, one is a little bit less, but it's easier to qualify on the vendor take back. Okay, so let's go. Let's analyze the other deal. Let's just move over here. All right, so this is 63 George Street. All right, so let's have a look at 729. This is located in, what do we have here? Okay, 63 George Street, 729. Let's look at the specifics here. It's actually a little older of a property, 1930s, but it's a legal duplex. 2 expensive bedrooms on the ground floor, so 2 and a non-compliant basement unit. Okay, so it's actually a triplex. You can actually rent someone in the basement. So what we're gonna do is we're gonna use 3 units on this. Okay, guys, we're gonna do it for 3 units. 2 expensive bedrooms on the ground floor, plus your buyers, additional. So it has real triplex potential. Okay, which means you can probably rent out that basement that's not complying for maybe, let's say, a bachelor. Okay, so let's do this. Kitchener. So we're going to add this information, 729. So we're going to go back to our analyzer. We're going to use a Kitchener, about a 5 cap, number of units. We're actually going to put 3 because we can generate that income. Okay, let me see here. It's going to be 723, was it? Good, let's go. Down payment, 20%. No CMHC fees. Interest rate, 5%. Boom, bang. Okay, so now it's 3 units. Okay, so we're gonna go 1 batch and 2 bedrooms. Okay, so we're gonna go 2 here. We're gonna go 1 here, and let's go to Google. Check it out. So this is in Kitchener. So let's go. Let's go here. We're gonna go back. Now it's average rent in Kitchener. Let's go down. Okay, we said what, 2 bedrooms, right? So we're gonna go 2 bedrooms here. It's 2169. So 2 bedrooms is 2169. Enter. We also have a bachelor, right? We're gonna use that. We can probably get some money out of that basement. So we're gonna use a 1 bed or a bachelor. I don't know. We don't know, right? Let's go. Let's be conservative. Let's go with a bachelor. Okay. 1620. So we're gonna go 1620. 1620. Boom. Okay. Wow. So we're in a pretty good cash flow already, right? Okay. Taxes. We're gonna scroll down. Taxes on this is 72.90. It's probably 1% roughly. Insurance. It's about 608 a month. Insurance, it's about 425, 608, 425. So let's go up to the top. 608. Okay, boom. We don't know about utilities. Let's have a look. Is it separately metered? So the ground floor is currently vacant, because this is a great opportunity, so you can actually charge full rent once you get a tenant in there. You don't have to worry about the 2.5% increase. This is a potential upgrade there, even though it's not vacant. Okay, it doesn't say anything about that. So what I like to do is, in this situation, is what I like to do is we're gonna get the tenant to pay for those costs. Okay, so we're gonna leave that blank. Again, 5%. So it's gonna be 50% here for vacancy, because again it's only 2 units. Okay, let's go over here. Our cash flow analyzers. We're gonna put in 2.5%. Okay, laundry, we can't really charge. Parking, no. Pet fees, maybe 100, maybe one of the units. $100 for keep fee. Okay, so if no is there any income, we'll put it there. Tenants pay utilities, yes. Energy efficient lighting, yes, we'll leave it at 5%. Lower interest rate. So we're gonna click here, make sure we've done it, and a lower interest rate, and that is 5% is pretty reasonable right now. Might even be more. So increased down payment, yes, we can essentially do that. So why don't we do that? So why don't we increase that to 30%? You're looking at 218.7 is what you're gonna need to secure this, but you're in a negative. Okay, so self-maintenance, yes. Okay, you're gonna self-maintain this property because of the low income, guys, and it's only 2 units. It's pretty easy to self-maintain. Okay, so now we're gonna add the rent guarantee program, obviously. Okay, that's gonna put in that money we're gonna pay that company, but we're gonna reduce this to 0 and see if we cash flow. There you go, $26,000 in cash flow. So if we go down back here, scroll across, we're actually per year $26,000 on this property, right? So this is a good deal, right, guys? $729, and because it's got the 3 units, right? It's got the 2 plus the 1 that we can probably use. It's like almost like a triplex, right? So we'd have to investigate that bottom unit first to see how much we really can get for it. But this is a great opportunity. Okay, so now let's say we can't afford the 729. Okay, so what we're gonna do? Okay, we can't afford a 729, so we're gonna see if we can get a vendor take back. So always ask, okay? So the price, we're gonna list it. We're gonna give them what they want, 729, okay? So 729. Good. We're gonna ask them for a vendor take back of at least 150. Okay, let's say we can get 3% interest rate. They want more, right? Maybe you can negotiate less, I'm not sure. So we're going to put 20% down, 30-year AM, and the first rate 5%. Okay, so this is actually a pretty good deal, guys. If you scroll over here to recap, so this is property 2 right here. So this is vendor take back. So we're getting a little less money in cash flow per year, but we coughed up less money, okay, to secure this property, right? Because we only need 579 is with the purchase price, and we put down 115 as opposed to 218. If they agree to a vendor take back. Again, these numbers are all negotiable, right? That's something you have to negotiate with the seller and see what's ideal for you. But this is not bad. $27,000, $26,000, or $21,000, depending if you're using a vendor take back. There's 3 units, $193 a door on the vendor take back, $243 per door. So it's actually a pretty good deal. So I think the winner here is absolutely going to be winner chicken dinner is going to be 63 George Street for sure. All right, so 63 George Street is the winner. So here's another valuation, guys. It's really simple. You're just going to go to realtor.ca, loopnet.ca, one of the 2 here, okay? And you're going to search properties, okay? You know, ideally, you kind of, to be honest with you, you're going to probably want more units, right? That's a perfect example, right, guys? That we did 3 units and it brought up that income. Okay, so that's absolutely what you're gonna need to do. So when they say you can't find profitable cash flow properties in Canada, it's a lie, right? It's quite easy once you start working the numbers and you can see what you can kind of negotiate with the seller and so forth. Okay, so this is what it is, guys. Cashflow.ca, sorry, Guaranteedcashflow.ca to get your analyzer. And this is the pro version. So we have the maximizer, and we have the cash flow maximizer, the vendor take back. We also have the rules of thumb, so easily calculate your expenses, and even gives you a projection in terms of rent. Okay, so we can target the rent. Okay, the rent is at this much, and if we increase it to $100, this is how much the income will be after. Okay, so for example, if we put in 2 bedrooms, 2 bath, we put in let's say we put in 1, and we hit enter, it puts in the money. Okay, so that's $2,200, but if we happen to get the rent up to $2,500, this is the difference in profit. Okay, $300 a month, but that adds a lot, especially if you have a lot of units. So now you can use this software, you can use this spreadsheet to actually analyze any deals, and it actually works better when you're looking at 5, 10, 20 plus units. Okay, because you have a lot more forgiveness, you have a lot more leniency in terms of, like, you don't have to do the management. You're gonna have to pay for a management company to come in and do that and so forth. Okay, so but you're gonna have a much more higher cash flow on the property. Again, you're gonna need more to secure the down payment, because anything above 5 units is called a commercial grade unit, and you're gonna need at least 35% in Canada to secure that commercial property. All right, guys. All right, so 53 George Street is the winner. All right. So if you want to check it out, it's on MLS, guys. So if you want to look it up, if it's still available today, as of today is November 24th, just check it up. You can search this property and see if you want to buy it, go ahead, put an offer in. So this is the whole point of doing this, is to hopefully find some successful properties that you guys can capitalize on. All right, till next time.